And here we go. Welcome, everybody. I'm Rob Booker, best-selling author of Yada 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 and blah blah blah. Very happy to see you here. Happy Friday. Happy non-farm payroll report day. I'm happy to, speaking of report on the fact that I had a nice winning trade today, and we're just about to expire on some options here with just a few minutes to go. And today's subject, the subject of today's broadcast will be, do the technicals lead the fundamentals? And the answer to that is, we're going to find out on today's broadcast. However, I do want to just look at the end of this contract here. For those of you that joined live today, I shorted the euro before the non-farm payroll report, and we had bearish divergence on short-term charts, and then we just dropped. And I shorted it, and my strike on the option was 14.12, and I just closed it a few moments ago because I wanted to take a win, and it looked like it was reversing, which it's doing, and I just wanted to get the win, and I was pretty emotional about it too. I didn't want to let a $40 win turn into a $21 loss or whatever. But so do the technicals lead the fundamentals? I guess we could approach that now. And I've got some comments from those of you that joined us live yesterday on YouTube. You left some comments and they were fantastic. We'll get to those in a moment. But I noticed this morning before the release that there was some bearish divergence, and price had started to form some of these reversal candles. For example, a long wick candle with the wick sticking outside and above the Bollinger Bands, invented by John Bollinger III, the only bionic man to ever trade futures. And then we had sort of an engulfing candle, a candle body that completely engulfed the body of the previous candle, and we started to drop a bit. And I was like, you know what, in advance of this non-farm payroll report, I just really like the idea of shorting it. And it occurs to me when you look at something like this, and one example is not enough to draw conclusions, but it is enough to speculate wildly and make accusations, right? Who wouldn't do that? However, I just see this time and time again that before the economic news is released, you get this advance notice on what's going to happen before it happens. Wow, the euro is just rocketing upward a bit on the close. And I think what you're getting here is traders closing out positions before they walk away from the desk at the beginning of the new hour. And then we should get a continuation of the trend later on in the day. I don't think we're going to see a complete reversal of this move. The non-farm payroll report was generally dollar positive. So could we maybe do something here about that? Could we, okay, there's something that closes in an hour. Let's see if we can do something about this. Okay, I'm looking, right now price is at 14.18. Well, there's some reasonably priced options that expire in an hour. Below 14.14 seems reasonable. What could we do that's a little bit later in the day? That's the 11 a.m. And then there's a 3 p.m., which seems like a long time to wait. Below 1400, not going to do that one. So there's none available that expire exactly when I want. But there's one with a 1 hour expiration. It seems totally reasonable that this is just a temporary retracement after the news. By the way, I had a dream last night that I made $200 and it took me over the top for my goal. That's at the 23% retracement. I don't want to wait too long to take this trade. All right, I think we're going to stay below. That's 59 minutes away. We're going to stay below 1440. Wow, that's already much more expensive than I want. Here, we'll buy one. We'll take one of these. We'll take a strike price if we can get it. Okay, we got it at 1410. So I'll describe to you what's going on, and I'll use just a a euro US dollar 15-minute chart. Price has to close in the next 59 minutes below 14.10. Has to continue. And if you look at fib retracements, right, so in a trend, price will, let's say, drop, and then go to a fib retracement level, like the 23, and then move back lower. Hopefully that's exactly what's going to happen. I don't know if it's going to happen, but risking 25 to make 75 seems completely reasonable. And if it doesn't work out, it doesn't work out. But I did have that dream, and if I had a dream about it, it's got to be true. It's got to be true. Speaking of having a dream, so my goal, as many of you know, and I was going to pull this up on my iPad, but my iPad's being a total jerk. I was going to give you a drawing of what I was thinking about doing, but it's just not, it's not going to work. So while this is getting set up and ready to go, I'm going to pull up the comments on yesterday's video. You know what? You can see them. Let's just show you the comments. David said, "Rise above it like an angel." I love you, David. You're absolutely amazing. Pete says this, and this really hit me hard, and I really appreciated this. He said, and I quote, "Rounding up, you hit 2,000. Yippee, you made it. Go for 2,500. And I thought to myself, so if you set a goal in your trading account, and let's say your goal is 2K, maybe set a goal in your trading account for 2,500, 2.5. Maybe do that. And then by shooting for more than what you really need, it makes the interim goal seem easier." So I think that's exactly what I'm going to do. I'm going to say, what I really want to do is I want to get over the $2,000 mark in this smaller account, because I think that if I get over that $2,000 mark in the smaller account, everything after that is easier. Matt Lococo, who is maybe the best pure short-term trader I've ever met in my life, said yesterday to me on a Telegram Messenger chat, and I should just read that. I should just pull that up. Who knows what other crazy stuff could be on Telegram Messenger. So let me just pull that up and then not show you everything else that's in there, so I don't want to make anybody embarrassed that I showed their messages. Okay. I think I can show this. Nobody's name is it's not gonna bother anybody. So check this out. So Matt and I were talking yesterday about the fact that traders do all kinds of things to build protective walls around themselves. Like, I'm never gonna risk this much, and I'm never gonna risk more than this, and there's these really strict rules, and those are fine, and some of those rules are really important. But that some of the progress that we make in life comes when we take a risk, and that risk is outside the bounds of what we promised that we would do. And it's kind of a paradox that you've got to have rules in place about money management, or else you could blow up your account. But then there are times when you have to throw those rules of money management out and do something that might seem more risky and seem less intelligent and maybe even seem outright stupid. And I told him that I was thinking today when I was trading binaries that I'm just going to have to lose money on this one and this one and this one too before I get the good trade. And I knew that had to happen before I got the good trade in there. But the responsible me wants to believe you can just wait for the good trade and take just that one. So here's what I'm talking about. And maybe we could just go sit over here for a minute and have a little fireside chat conversation. All right? So I'll just move over here to the... All right, so I've been wanting to have this conversation for a while. And so I just thought we'd sit down here and move things around, and I don't know. It makes it easier for me to have this conversation when, oh look, I got to move my chair down a little bit. All right. So what we think is that we just well, what happens is we think that we're going to get a system that has a really high probability of success, and that by trading that high probability system, all of our dreams will come true and all of the questions will be answered and we never have to struggle. And we don't really think that. Nobody's dumb enough to really think those things. There's some dumb people out there, but traders aren't dumb people. But what we do is we fall for the idea that there's going to be a high probability trading system, and then we shift the responsibility for success onto the system Sean Campbell's famous for talking about the shifting responsibilities that traders make. And we think sometimes that we can shift the responsibility onto the trading system and that the high probability associated with the trading system is going to take care of our problems, and then we're going to be okay. And what happens is we'll take a loss, we'll take a loss, we'll take a loss, and we'll start to feel really concerned, and we'll actually start to close up, and we'll be a turtle going back into our shell, and we'll start to feel worried and concerned and scared and afraid and betrayed by the trading system or the author of the trading system, and then we spiral out of control. And then one day you wake up and you're surrounded by pizza boxes and you didn't even know it, but you adopted like 17 howler monkeys and they're running all over your house throwing poo at each other, and you're like, how did it even get here? And it got there because in the original, at the very beginning, we had unreasonable expectations for what the trajectory of success looks like. And it more looks like loss, 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 loss. Oh my gosh, now I really know what's going to happen. Bad experience, bad experience, bad experience. Learning from bad experience. Now I get it. And it's a trader, a successful trader, is someone who, after a series of bad outcomes, actually feels more confident and knows what to do. Having learned from the situation, now has more confidence and more certainty about what to do and can take more risk. That it's not about holding on to bad trades, but holding on to bad trades does a really interesting thing. Like if you give a great trader the smallest trade size and a random entry into a financial instrument that they trade regularly, and that trade goes against them for a long way, they'll just sort of learn where price is going by watching an open trade. And you almost can't learn anything from just watching the chart. It's almost like you have to have an open trade going that isn't going well to really actually know where it is that you should get in. In golf, my dad used to say, take your second shot first, meaning you take your first shot and it's bad, and then you put your mulligan down, and then all of a sudden all the emotion and worry and concern and anxiety is gone, and you take a really good shot. And in trading, you can also do this with, like I've been doing, I've been taking small risk and contracts that expire on the same day, loss, loss, loss. Now I know what's really going on. So yesterday, to tell you a story, I traded the British pound US dollar and lost, lost, lost. And then I got a contract that expired at 3 a.m. and it was going to profit if price fell below $1.30. And I took it, and it just was awesome. And I took two of them. Instead of one, I took two. And it was the best trade I'd had all day. It was easily the best trade I had all day. And it could only come after I'd had some bad experiences. Now that contract expired at 3 a.m., 1 micro pip out of the money, meaning the strike price was 1.3000, 1.3000. Well, 1.3000 and then a 1 is where the exchange says that price closed. I'm gonna ask for that trade to be audited, because I'm just like, 1 micro pip away from profitability? Come on. So I'm going to argue my case. I'm going to see what I have to do to put in a ticket and audit and all that business or whatever. But anyway, I had to see those losses in order to feel the confidence about the trade that I was going to take next. Okay, let's go back over to the conversation I had with Matt Lococo. I don't know if any of you know Matt that are watching now, but if you do, it would be nice to maybe reach out to Matt and pay him to come on and talk to us about some of this as well. So I think that high margin trading can be good for some people, not all people, but it can be good. Trading involves a substantial risk of loss and is not suitable for all people. But some people do better at high margin trading because they can take that last big trade. When you're ready to get all your losses back and finally get the good trade and have the confidence, you do well at it. Matt says, that's it exactly. It's more about defense than just wanting to hit the big one. but it makes big ones way bigger. There are limits, of course, and diminishing returns plays a part at a certain point, but I believe the common trader is far better equipped for the markets with way more margin than they actually use on popular advice, let alone have access to. In my own audits of trading performance, I make a lot more and more consistently when size is way too big, even before tripling down on a loser. Meaning his first trade is even better. I think a major unrecognized truth for many is that we're better at picking direction than we think we are, but we all suck at timing. With enough margin, neither one really matters. Think about that. So Matt and Sean, my friend, for a while were trading with a broker with a significant amount of margin. I got to lean down here so you can see me. This posture is terrible. But they were trading with this overseas broker that gave them like 1,000 to 1 margin, back when you could do that. And they were like doubling trading accounts like every 2 weeks. It was just insane. So anyway, he refers to this. Okay, that was a really weird posture, wasn't it? When Sean and I were trading with that broker, there was no analysis at all, really. He'd wake up and buy some coffee futures, or CFDs. Sometimes I didn't even look at the chart or even price. I'd just wake up and buy it. It was going to go up great. If it tanked well, I had enough leverage to muscle profit out of it anyway. I just think that's brilliant. I think there's just something amazing in those lines of text from Matt. Matt's one of those people in your life that says brilliant things just off the cuff, just like with no previous preparation. Let's see where the euro is going. Where are you going, euro? This is our trade here. So I shorted the old euro, strike price 14.10, and we seem to be moving up instead of down. But I like the trend, and on a non-farm payroll report day, I do enjoy a delicious trend. And I think that if we get to 14.25, I'm going to take another one of these with a strike price that's a little bit higher. Higher, said Peter Gabriel. This is the next door, right here, on the left side, is the US dollar Japanese yen. Japanese is Japanese mayonnaise. I don't know if any of you know that. If you're Japanese and you're watching this, you know that that's a lie. But I do these broadcasts at times when most of you wouldn't be able to watch it anyway, so I can get away with it. This is a head and shoulders pattern. Get a little closer with dandruff. Head and shoulders. Head, hello, hello. Shoulder, shoulder. Put your shoulder to the wheel, push along. And if this sucker breaks out, the distance that it travels typically will be equal to the distance between, that is the worst straight line, that is the least straight line ever drawn. TradingView.com should give me an award for drawing the worst straight line ever. So let's not extend the line. Let's color it red. So if it breaks out lower, what it should do is break out lower and extend the distance of the original head and shoulders, the distance between the head and the neckline. So if it breaks lower than the daily pivot, it should go down. Oh, speaking of daily pivots. Okay, that's not the chart I wanted to change the time frame on. So let's look at this euro business. I guess I'll look at it over here on this side. And we'll go to one chart. So I also today noticed that the euro had its daily pivot below price, and that it was in the process of missing its daily pivot. And that made me really interested in shorting the euro before the economic news. I wonder where these are, and yep, look at that. Not a surprise that we were also at R1. That's a resistance 1 level on a pivot. And it's beautiful, and it's delightful. It's not really obvious enough here, probably on the broadcast, so let's extend that out. Let's check and see if anybody's chatting. It takes a while for the accumulated chat box situation to start popping up messages. And there probably won't be any messages here, although I know a lot of you are probably contributing and saying hello and talking to each other and discussing. Now, discuss it amongst yourselves. So I really, really, really like shorting the euro, and I want to get myself ready to do that again. Like I said, if it hit 14.25, I might set up another contract, and it did that. It hit 14.25. So let's see if I can get another one. 14.22, 14.18, 14 is 81. Sure, I'll take that one. Not a lot of time to expiration. But the price is close by. And the trend is down today, so I'm trading with the trend. And I've got 43 minutes for that to finish off below 1400. See, there's not enough. I don't want to trade something that says that we're going to go below 1400. We didn't make it that far today yet. So I don't want to trade something that says that we can do that. I don't feel comfortable with that. So we want to go below 1418. That's what we want. We want to go below this line here. And what I'm going to do is set an alert up, so I'll get a text message when that happens. And it's going to be lovely. Wow, one of these is already profitable, I bet. Yep, $3.50. Woohoo! Don't spend it all in one place. So it's the weekend. It's Friday. I'm gonna go buy a suit tomorrow. I'm gonna dress up for this broadcast one day. I'm not really gonna go buy a suit. Hey, look at this. This finally popped up. So here's what I've been thinking lately. So I've been thinking a lot about these live broadcasts. And if you're watching now the recording or the live broadcast, I want to know what you like best. Do you like the trading? Does that interest you? Is that exciting? Do you like the nonstop comedy? I'm just kidding. Ha 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 ha. Do you like the psychological stuff? And I'm asking you because I lack the, I probably should just ignore what you like and just do what I want. But I really think there's a lot to learn from watching these live trades. But it's honestly, it just scares the crud out of me. It's frightening to sit here live and think, well, what if somebody follows me into this trade and loses money? Like, I don't want you to lose money. I don't want you to do poorly. I want you to do well. And not every trade that I take is going to work. In fact, as we've just discussed, a whole bunch of the ones that I take aren't going to work. So, I don't know, just leave some feedback in the comments. If you don't leave any feedback in the comments, then I'm just going to assume that you're a jerk. Like the euro is a total jerk right now. I love you all. I'm so grateful for the time that we spend together. Been pretty consistent about uploading content to YouTube in particular. So if you're on YouTube or you ever have been on my YouTube page, don't forget to click the subscribe button, which is a picture of my head down here. Right? No. Down there, probably. Somewhere down. Anyway, I really appreciate it. I'm so grateful for the time that we have together. It's a lot of fun. Have an absolutely spectacular Friday, everybody. I'll talk to you soon. Bye for now.